what's up, everybody? It is Thursday, December 17th. Hey, I got my 89 print today on the dollar index. I just made that video yesterday saying I'm waiting for my 89 print. Boom, the next day I got my 89 print on the dollar index. Now, let me go back. I was bearish on the dollar. I said the dollar rally in 2018 and 2019 was a rally in a bear market, and eventually the dollar would resume its downtrend. I was laughed at. I was mocked. I was made fun of by many of you who watch this channel, quite honestly. The dollar index ran up 100, 101, 102. I said you got to sell into that. You got to be short. You know, if you are looking to make big money as an investor, you have to isolate these major trends. You have to understand the underlying conditions of what is causing those trends. They don't just go away, you know, in a couple of weeks or a couple of months or even in a couple of years. I've been all through that. You know, these stem from policy decisions. And most of these policy decisions, or many of them, the effects are felt long term. Okay? Fiscal expansion, the trade deficit. These are bearish underlying fundamentals for the dollar, and they have been in place for a very long time, and they're going to stay in place. So now we got an 89 print on the dollar index. And we could see a rally again. We could see another, you know, short covering rally. But you got to sell into that because we're going to see an 88 print. We're going to see an 80 print. We're going to see a 79 print. Now, I will tell you, because some of you may say, oh, he's just some kind of perma bear on the dollar. No, I'll stay bearish on the dollar when conditions tell me and when the policies are in place that create those conditions. If things change down the road, I'm going to say I'm exiting my dollar short, I'm going long, and I'm going to stay long until those conditions change. You know, and I go back, I think I said something a couple of weeks ago, 2 weeks ago maybe, that I think it was Morgan Stanley, one of the big investment banks, an article. Their head Forex guy. We're getting out of the short dollar because it's oversold. Again, oversold. What does it mean? That's like a meaningless thing. I mean, if conditions say the dollar is going to depreciate because of those conditions, and as long as those conditions remain in effect, oversold means nothing. So you can get to, it's like, you look at the stock market right now, and so many people are missing out on this because they're like, it's overbought, it's overbought. And I keep telling you, the fiscal flows are so enormous that it's just going to keep pumping the stock market up. The money must go somewhere. The money that the government is spending must go somewhere, and it's going to these big companies that are well positioned within the economy. They're pulling up the market averages, and that's what's happening. If you understand the dynamic, if you understand of what is happening, not looking at some lines on a chart, but truly understanding what is happening, you know, then you're not going to get scared out of these things. Morgan Stanley covered its dollar short like way, way, way above where we left so much money on the table. For what? Because there was a line on a chart? All right, let me switch gears here. I want to talk about something. A few weeks ago, you may recall, because I did a video on this, and it was a whole big, you know, controversy at the time, that Secretary Mnuchin asked the Fed to return the CARES Act money. Remember, that was the $454 billion which the Treasury gave to the Fed to backstop its loans, all right? Which at the time, I made several videos about that, saying how ridiculous and how unnecessary that was. The Fed could lend to whomever it wants. It doesn't need a Treasury backstop. And that $454 billion was something like like 25% of the stimulus, which went to nowhere, okay? That could have been $1,500 for every man, woman, and child, every citizen of the United States. It went to nowhere. That was a crazy, unnecessary, ridiculous thing created by Mnuchin and Larry Kudlow. So anyway, there was a big controversy because Mnuchin said, hey, we want that money back. Treasury wants that money back. And it was all over the place saying, oh, that's the end of the stimulus. And there's a fight going on between the Treasury and the Fed. And, Mnuchin and Trump are trying to pull the rug out from under, the Biden administration, all this bullshit. I did videos on this. I said it was completely ridiculous and it has no consequence whatsoever as to the ability of the Fed to continue to lend in these programs. Now, if you have been following these programs, and they're every week on Thursday, like today, we get the H41 Fed release that shows you the weekly numbers there. They've been going up and up and up, even since this supposed clawback of that money. Now, in the last week, something very interesting. The municipal liquidity SPV, the municipal liquidity, the Fed has a number of special purpose vehicles. One is municipal liquidity, one is corporate credit liquidity, one is Main Street, okay? The municipal liquidity facility increased by $4.9 billion. Now you have to understand, up until now, they've been seeing weekly increases, maybe 100 million, maybe 150 million. It went up $4.9 billion today. And the corporate credit facility, that went up in the last 2 weeks, $3.6 billion. And prior to that, again, it was going up like 50 million, 100 million. So something's going on in the last week, last 2 weeks where entities, municipalities, corporations have been tapping those Fed SPVs. They've been reaching out for help. Now, I know there was one article that I saw where the New York City MTA, the MTA, that's the Metropolitan Transit Association, they run the subway system. They tapped out their credit line with the Fed. They tapped out their credit line with the Fed. So that may have something to do with it. I don't think they went to the Fed for $4.9 billion because that would have come under probably that municipal liquidity facility. But it's just interesting because that is a big, big increase. Anyway, the point I'm trying to make is that even with that clawback of the money, that Treasury said, hey, give us that CARES money back, and there was this whole controversy and everybody was going crazy about it like that. I said, no, that's not going to stop the Fed from lending if they have to lend. That's not going to stop. And I was right. Again, it hasn't. All right? When you read this stuff, see, folks, there's a lot of opportunity to make money. A lot of opportunity. When you go against ignorance, when you go against emotion, you don't even have to know anything. You don't even have to know economics. You don't have to know anything about markets. You don't have to know even anything about MMT, although that is a massive advantage because you know how policy is going to affect the financial markets and the economy through the understanding of MMT. But basically, if you go against ignorance, and having said that, you kind of have to know MMT because then you're able to understand what's ignorance and what isn't. You get it? But you go against ignorance, you go against emotion, and 9 times out of 10, 10 times out of 10, really, if you know how to manage yourself, you'll make money on it. Just like my dollar short. All right, everybody, remember, you got only like 2 more weeks to sign up for a 30-day free trial of MMT Trader at the current rate. In January 2021, it's going up, and I think I'm eliminating the 30-day free trial. I haven't really decided yet. But But take advantage of it while it's there. Go to my website, pitbulleconomics.com, and sign up right now, today. See you tomorrow. Bye-bye.